always thought that ICICI is a retail lending leader. 1998 was the first time we wrote a retail loan. And I was there along with Shikha, and we were tasked to come up with a budget. And so we worked very hard. Obviously, we had to present a budget to Mr. Kamath. We worked very hard. We thought we would come up with a very aggressive budget. And we came up with a budget that showed some number at the end of 5 years. And we were very proud, and we sort of made a presentation. Mr. Kamath looked at it and he said, okay, so you guys are telling me that at the end of 5 years, you are going to achieve a number that's a fraction of what the market leader is doing currently. If that is what you guys are wanting to do, I don't want to be in this business. Let's not talk about it. And he walked out of the room. Of course, Afra Tafri mach gayi, then we all went back to the drawing boards. Ultimately, upshot was, we did come up with a number that was acceptable to him. The biggest learning for me as an individual was this so-called aggressive number. We really worked hard on it. We didn't want him walking out a second time. We worked very hard. We came up with what we thought was, again, a very aggressive number at the end of 5 years. I think the learning for me was, even that 5-year number was achieved in 3 years. So I think that kind of, I've seen this in action. This growth we are talking, there is a lot of talks of growth. And I've actually seen this firsthand. For me, growth is a synonym with you. We currently hear so much about growth, right? Amrit Kal, financialization, digitalization, etc. What's your own view? 2030, how do you see India?
Again, thank you for all those kind words. Basically, you are telling the audience that I'm a hard taskmaster. So, okay.
You are, sir.
It didn't come out in the resume. I always think of myself somewhat different. But coming to your question, I look at growth in terms of opportunity to grow and execution to grow. And if I look at it on that metric, we have a growth opportunity, particularly starting with infrastructure, because that's the headline item which provides momentum throughout the next 25 years. That's Amrit Kal as we see. You just look around you at what needs to be built, and it gives you an idea whether we are going to achieve that growth or not. And you take start from urban rejuvenation, rural rejuvenation, rejuvenation in intermediate cities, transportation by whichever means, and all the new things that are happening, the digital communication and the setup, private sector, public sector. There is enough runway for 25 years. So I believe whatever growth number you put at, it should be an aspirational number and you will meet it. So if you are saying we are going to grow at 7%, I would think that India always grows at the number that you put on map plus something more. So I would guess that there's another 25% which we don't count properly or don't account properly, both. I used to earlier say it is uncounted and unaccounted. So if you add all those things, plus now the digital India, I think you will grow at near double digits. Then rest is compounding. So if you are at 3.5 trillion economy today, where will you be compounding at 10% in the next 7 years? That's what you're asking. 2030, you should be double. And the next 7 years, you should be double of that. So I think the number game is very simple. And the second doubling, if it happens as we are talking, then you probably are clearly in the top 2 economies in the world by GDP, not on PPP, but on GDP. So that's what I aspire for in India for the next 20-25 years.
So that's a 15 trillion number.
30
trillion number.
30 to 40, somewhere in between.
So, I mean, I am having difficulty counting the zeros, sir. What you are saying is that the home loan story will get repeated and that we will do it faster than, what even we are anticipating. So one of the worries around this whole growth, and it's been a hot button issue also, is the inclusiveness, or the income inequality of this growth. What are your views, and will it be different?
Yeah, I think, Harsh, there are many things that we are not doing right. I think the first is we are not measuring things right. And I'll start with inflation and then come to the very relevant points that you made. You look at the inflation issue that is now coming out. The first time people are saying, are the CPI numbers really properly done? It doesn't need much thinking. They're not properly done. The base year is 10 years minus. It just doesn't make any logic to me. So whatever you are counting is not counting right. 20 years back or 15 years back, the same problem was there with the other industrial production growth numbers. When I looked at it, it was 15 years dated. In the index, there were industries which no longer existed or had such a low weightage, which was really not meaningful. For example, textiles in the organized sector. From that time to go back 15 years, textiles in the organized sector was a major part of the overall Indian economic story. But when I looked at it, textiles from organized sector was zero. Zero. It had all moved to the unorganized sector, but still counted. So you got X weightage into zero is zero. So your growth is always understated. So I think that was reset a few years back. But the CPI numbers obviously weren't. Now, if you look at just food prices, see what has happened in the last 6 months. I'm sure some men, and I'm sure all the ladies here, look at food prices over the last 6 months when you're ordering or when you're shopping. I see a clear decline. And that is not reflected in the numbers. So something is not right somewhere. So now we come to the income distribution, income earning. I think the same thing is happening. We are not counting right. We come to employment, we are not counting right. So to come to your question per se, let me just look at the EPFO numbers. I saw a number just 3 days back. Last 1 year or 2 years, you look at EPFO registrations, they signify a robust new hiring scenario, but not reflected in the noise that you hear in the system. There could be pockets in India where unemployment is there, underemployment is there, that is, your aspiration is not met. But you look at the rest of India, there is a shortage of people, trained or untrained. Now, I'm segueing all this because ultimately this gets down to what is the potential at the bottom of the pyramid. I think the bottom of the pyramid is started to improve the quality of life, quality of the aspirations, and so on. But it will improve even more as the growth that I've described happens. That is 3.5 trillion to 7 trillion. A whole lot of that growth will happen down below. Now, you take certain other metrics which we don't normally take. If you look at, how many of you follow YouTube bloggers? And if you try to look at, just if you go around, YouTube will push those to you. You don't have to do too much work. But bloggers from village India. And what is the number of followers they have? And what are their earnings? And what is the life change lifestyle change that has come to them and people around them? And it is a virtuous cycle. It doesn't stop. So I'll give you the story of one blogger. And I don't want to bore you. There are hundreds. And this is my last 20 minutes before I go to sleep to understand what is happening around India, social connect. And that comes to me from looking at all, people, young people, older people blogging. So this is a young guy, 20-year-old. He comes from a village called Hansi, somewhere in Haryana, where he showed 2 years back, he had 100,000 subscribers to his account and maybe 200,000 views per day or something like that. His blog was a daily blog, and his home is Hansi doesn't have sewage, doesn't have water supply. There is no piped water supply. And his house or a home was, without plastering. I'm just giving you what type of, from what sector he comes in, where you would say that he really now has to aspire things. Today, cut to today, he has got 15 million subscribers, 1.5 crore subscribers. His daily viewership now is around 5 or 6 million. It was at around 7. It has come down to 5 or 6 million. His blog is a very simple blog. His His own daily life, 10 minutes. And you and I may say we may not be interested in it, but he has 15 million subscribers and 7 million of them are watching him every day. He has now become an influencer and so on, which I may or may not want to talk about. But the fact that 7 million people are seeing his blog and he's earning, and I'll tell you his earnings in a minute, of course, then he aspires. That's where the change starts. And this is a true story, not what he has earned and so on. So he starts with a cycle, he goes on to a motorcycle, then he goes into a small car, then he goes into a slightly bigger car, then he goes into Innova, then he's got an Innova and a Thar. Then he says that I now want an electric vehicle. Then he said, I want to move from Hansi. So I'm going to my native place, that's Haldwani in UP. And he says, I want a home in a gated community. Now suddenly his aspiration jumps from house without plaster to a gated community. And he says, I have these 7 million subscribers. I'm 15 million. That time it was 10 million or 12 million. And they all are looking for a selfie all the time. So I want to be in a gated community so that my other neighbors are not disturbed. But I'll go out and get a selfie. So and he's 20 years old. I didn't tell this earlier. 20 years old. And of course, 5-bedroom house, air conditioning in every room. He puts a gaming room and everything. And I'm looking at all the people who will be employed, putting those air conditioners up, maintaining those cars that he has got. So there is, wealth gets distributed. What he's earning is getting distributed. How much is he earning? So I said, 6 million or so subscribers. Let's look at it as, round it off, 6 million, let us say. $500 per million subscribers. So $3,000 per day. 3,000 into, round it off to 300 days. So we are hitting $1 million. So this is a blogger who 2 years back started from a home without a plaster, no running water, no running sewage, and a cycle. And so that you don't have to, I can give an exercise, hunt for who this is, but I can give you the name. It's called Saurav Joshi Blog. Saurav Joshi Blog or Vlog, one of these. The moment you say Saurav Joshi on YouTube, he'll come up. He's probably the most viewed guy, and he came from this bag. And there are hundreds of these guys. So I'm not talking about what the YouTube has done, but what I'm talking about is how it percolates down as wealth gets created and wealth gets distributed. And that's happening in every area. We used to say 20 years back, 22, 23 years back, the white-collar revolution. There is a CRISIL study which said that every white-collar job, those days primarily in the IT business, later on in our business, when we started going from 500 employees to 1,000, 10,000, 100,000, we said in the IT space, we said for every job created, 5 other jobs were created. Some of them could be part-time, some of them could be full-time, but so that started the wealth creation process at the bottom. This saving process at the bottom. Today, that is happening through the digital world in a variety of ways which we are still not comprehending, which we'll comprehend. So in addition to overall growth driving rural economies, there are a whole lot of other things that are driving rural economies. There's another channel, which if you see, it's called the Village Cooking Channel. It was earlier called Grandpa's channel, that Grandpa, I think, passed away. This six people going into a field and cooking in a field. It has got more subscribers than Saurav Joshi. And they blog about once in 15 days or once in a month. And they cook for about 50 people. They tell you how to cook like a bada meal for 50 people. One dish is cooked. And within a month of posting, that will have a few crore views. Wow. So there are so many means in which the digital revolution is impacting people. So what is driving wealth? What is driving wealth is basically affordability, connectivity, affordability of the device in our pockets, and the data connectivity, and the cost of data. All three together is driving this new India. I'm not saying that you create wealth by being on YouTube. No. I'm saying that you create wealth by creating opportunities, and these opportunities are flowing down now to the bottom of the pyramid. So I would think that in addition to agriculture, value-added agriculture, opportunities in towns and semi-urban centers, urban centers, this new white-collar revolution that is happening through digital India, as it were, I think we are seeing a new India. And I would, risk saying that whatever growth number you accept, 6%, 7%, Please add 25% to that. Not just the counted, uncounted, but now I say digital India, which has not happened. So I'm taking a leap of faith. But I have some measure to do it. Today, it may be 5% or 6% of the overall GDP. China, 2 years back, digital was 30 to 35%. This year, the last number I saw, digital contribution is 40% to the GDP. So I'm saying that let's assume 25% will be GDP. Today it's zero. So it will all be incremental. So I think when you are growing at somewhere between 7 and 10, let us not, we compounded at 7%, we can compound at 10%. I think growth will reach everyone, and which would mean that there is a need for all of you to advise a much larger set of people in what they should do with their savings, because aspirations, then consumption, and then saving. I think that's how it is growing, but it's growing very rapidly.
Wow, sir. You just, of course, apart from a new career idea of being a blogger and talking about cooking, which I might find difficult since I don't know how to do cooking. But sir, moving to, you mentioned about that these are going to give us great opportunities as advisors. The fact remains that if you look at the advisory landscape here, the number of RIAs is just about 1,300. By some accounts, it's probably less than 900. If you look at the bigger picture also, all the large players, they have chosen not to be advisors. They've primarily chosen to be distributors of products. So how do you see this resolving? There is this demand that is going to rise from a aspirational India that's growing at the pace that you just mentioned. How do you see this getting resolved?
Yeah, it's a very interesting question, but let me answer it this way. I think the distribution-led model is under threat. And what is threatening it is digital India. But the interface where the user of the digital platform to invest, there's an interface where he needs advice. And that's where this set of advisors in this room and beyond would need to come in. And that, to me, is going to be, again, a digital journey. So you have, of course, a one-on-one, face-to-face contact, but I think that journey also will become digital. That journey will get digital, and the customer will also disintermediate, will get disintermediate from the distribution structure that is there today. Because that customer is getting to be savvy to get directly online, but he is not savvy enough to get advised or get his own advice through his own research. So you need to then provide him that advice and that hand-holding. I think this will be the model that will evolve, and it will evolve very rapidly, because I see the disruption of all distribution-led models coming at a rapid rate which we are not understanding. You take the broking business, how it has evolved from the time you were at ICICI to today. And how it has evolved from 20 years back when we launched ICICI, what we call web trade, to the disruption that has taken place with Zerodha. So I think the disruption is going to be at a very rapid rate, and the distribution that we know is going to be probably passé. And the advisor will have to come in to provide the advice that the investor will need and should seek to meet his or her aspirations.
But that still leaves the issue that the number of advisors have not grown. It's been 10 years. And, earlier in the day, we had Mr. Anant Narayan, who's the whole-time member. And so there is this issue about regulations being too tight for the advisors, and therefore also probably the reason why larger players are choosing to go to the other routes. Do you see that? I mean, should as an advisory community expect that, these numbers will go up?
I look at it from the other end. We'll come to the advisory community. I would come at it from the user end. The advisory community will also grow when you realize that the user base is increased at such a rapid rate that you are needed. Just as the distributors will realize that that community today doesn't need me because there is another path to providing the service that I was providing. But service that you provide cannot be. Now you may say, why am I not seeing it today? Yeah, you have a circle of clients whom you are serving. Beyond that is this rapidly increasing circle of potential clients who are today just starting to invest, because that industry also is just growing. So if you look at the growth in assets under management and bank deposits, for the customer, investing in a bank is a brainless exercise. He knows that as long as I go to any bank, by and large, I am protected. So that's first level. Second, I go into the bank, so I'm protected. My interest rate, there is no differential. So earlier on, I went on the basis who's my next door banker. Now I'm going on the basis who's got a better app, who services me better, and maybe my next door banker. So this is my basic premise, but not in the business that you are in. So today, there are people going there, maybe starting as what I call day traders. Then they will get into slowly an investment mindset. They have heard of SIP, they may do SIP, but very quickly they will say that I need more advice to see how should I balance my risk, what should I do, and so on and so forth. So I think that is just happening because that set of customer base is still not visible. It is building up. As with everything that has happened in India, it takes time for momentum to build in that space. And I would think I can see the signs of that. Why am I saying that? You look at, I'd asked Harsh when he talked to me, just share with me the growth numbers of AUM of asset managers and banks. It is startling. In the last, that is 5-year numbers that we have, the AUM is doubled, whereas there is hardly a 30% growth in bank deposits. The stark numbers. And if you look at it now, annually, it's now all over the media. I think 20% growth in AUM annually and 10% growth in deposits. It's not an accident. Bankers are still believing this is an accident. This is not an accident. This is a structural change. Now you will have to figure out what is the impact of the structural change on your potential customer. And when that is pervasive, that is where people will look out for advisory services, and that is where the core of advisory numbers will increase. So I don't want to call it chicken and egg problem. It is a part of a continuum, and I am seeing the disruption happening. So if you were to ask me, will I bet 10 years from now on a bank or a properly decided manager of my assets, I would say a properly designed and set up asset manager. And if you ask me the next question, will that asset manager be led by managed funds or index funds and ETFs? You know the answer. But even within index funds and ETFs, there is need for advice. It doesn't happen. So your customer needs to be advised on that. So I would think that this is going to be a vast opportunity as a customer set which is used to banking migrates and a whole lot of new customers migrate, and they will need knowledge and advice on what to do.
So I think the equity culture and the long-term investment in equity by retail, and we are seeing the monthly SIP numbers, and I mean every month it is hitting a new high. It's at about 14,000 crores now. So that seems to be well established. Whether whatever numbers you look at, retail investors, Indian investors versus foreign investors, etc. What about the growth in retail investing in long-term debt? I mean, that except for the insurance companies where retail sort of, or retirement, EPFO and things like that, where the retail participates indirectly, there doesn't seem to be any movement on long-term participation by retail directly into long-term debt.
We have to ask ourselves a question, why? And the answer is very simple. One, you look at corporate India 3 years back and today. 3 years back, the debt equity ratio of corporate India would have been 1.7, 1.8 is to 1. Much better than 10 years back when it was probably 2.7 is to 1. And much better than 30, 40, 50 years back when it used to be 4 is to 1, 5 is to 1. Total debt, short term, long term. So they were cleaned up. But between 3 years back and today, you got top 500 corporates with hardly any debt. Because the banks are also stronger. Corporate India is also stronger. So I ask a question. With a leverage of 2 is to 1, uncertainty, sudden downgrades, would I as a common person invest in long-term instruments coming from the private sector? The answer would be a clear no. But if I had a very clear path to saying that I can rely on this paper and there's a long-term path to growth, then I might have invested. So there was no environment to invest. But today there is an environment to invest, slowly getting built up, because you've got a clean corporate structure or a significantly cleaner corporate structure. A. B, I think now there are instruments being brought to market, which again the customer could have more confidence. Take, for example, the growth in InvITs. And I would believe that InvITs and REITs will be one of the fastest growing sites. And that's a product which, this group here could look, I'm sure would be looking at with great interest to advise or not advise on. And then government securities itself properly bundled. So one was on the private sector, not paper of a quality which you could honestly recommend. Second, newer instruments not coming to the fore like InvITs and other things. And most importantly, this is only the start of it. Most importantly, a very rigid way in which the investor can come in and exit. You remember what you did with the ICICI safety bonds in 98. It's a rigid way to come in and now cut to today when I was at another event a few days back where I met Mr. Gadkari, and he was very happy that the last issue that he did for NHAI was sold out in a day. And he said, Mr. Kamath, it was all sold out to retail investors. And it didn't stop there. That's fine. I was very happy. He was very happy. He says, my next issue, I'm going to make it with monthly interest payout. Now, if you imagine a product where there's monthly interest payout from a government company based on an established asset with an established cash flow, higher than the bond, and it's a long-term instrument. So I presume if the 10-year bond is at 7.5 or whatever, this will be at least 25 bips higher. Let's say it's at 8%. Against your savings deposit of 4%. And now the ease of coming and going out, you make the same because it's all digitally connected. And you are talking to a younger customer set. Why will that younger customer not rush to this? And why should he not rush to every bit of any asset that comes out of the government monetization pool where there's a strong cash flow and which is released into the market? And so you need to, in a way, everybody needs to work with the government. I think we at NaBFID will work with the government to release paper directly into the market at a rate more attractive than government bonds, and liquid in the sense that it is interest is paid on liquid basis and you can come in and go out. But I'm looking at this product more for people who are retired. And they can take a look at whether I want a 5-year maturity paper, 10-year maturity paper. I'm looking for steady monthly income on this. So I think the variety of products and what you could do with it is changing at a dramatic pace. And I think that's what will change this market.
So, I mean, what we are really talking about is the kind of things that people are doing today, which is, say, a senior citizen savings scheme, which gives regular interest, or a post office MIS scheme, etc. This would be a competitor. It will be at better rates, and these are market-determined rates. So even the government is not...
Exactly. And if it's 2% higher, then who will not take it?
And there is no pressure on the treasury because it's a self-paying asset. Wow. Sir, I mean, turning from there and, coming to your own personal finance journey, what's been your... if I may ask a personal question, sir, what's been your personal finance story? When you were just fresh out of graduation, whatever you can share.
Yeah. Okay, I'll share something that is shared with somebody in the media just now. The question they asked me is they wanted a quote for Ladies' Day on my learnings and who did I learn from. So, honestly, the answer, or the very honest answer, and it touched me that, and I had not shared it with anybody, and I'll share it with the public, in the public. I learned from my mother. So I told them I learned from my mother. And I said, this goes back to, I had not graduated. I must have been in second year of engineering school. And I used to smoke, because I gave smoking back 40 years back, I think. But at that time I was smoking. And so one day she very gently asked me, there was no, she said, how much do you spend on cigarettes in a month? So I gave a number. So she said, multiply it by 12. So I gave a number. She said, do you know what is the corpus you require to earn that much in a year? That was my first lesson in finance, that you need a corpus on which you earn to spend. I think from that day onwards, somehow my mind went into finance, and that I don't know, I started doing better than most people in finance. And then I segued into finance. So, but I, give entire credit to putting that idea, thought in my mind that to spend you need to earn, and to earn you need to create a corpus. I think that's the philosophy that you are basically sharing with the people. And that's a story you have to share with the young aspirant India.
Sir, have you ever felt the need for an advisor? What do...
See, Harsh, I have felt the need for an advisor. But my problem is, so the advisors from the time that I got some investable wealth, they look at me and say, Mr. Kamath, you are now, late 60s at that time, maybe. And so, large part of your thing should be in fixed deposits. So I say, that's not how I think. I think I'm firstly not that old. Secondly, I would apply a different metric, which I'm sure all of you do. So I say the metric that, the question that you should ask is, what is your, which I'm sure you do, but a lot of advisors, particularly distributor-led advisors, don't do. What is your spend monthly? You add everything that you want, allow anything for shock, typical things. Do you have any other earnings? Do you have streams of income? What are they? And how long do you think they will continue? Thereafter, my mother's advice, do you have a stream of income which gives you, income to a stream of investment which gives you income to spread? In today's parlance, we'll call it another stream. And then say, how do I, package the whole thing? They don't do that. They pick a formula and say that, 80% of your assets have to be in fixed deposits or something like that. So I would think this learning has to be there. So I still listen to them. I certainly have an advisor. I mean, one of my bank people. I hear them out, but by now they are, I think, conditioned to believe that I may do something completely different. And again, I also find that a lot of times advisors go by what is written or said and don't apply their own mind. So that is something, again, that you need to put in. The value of new things are also not put into the daily mix. Because with the digital disruption that has happened in the last 3 years, the whole equation has changed dramatically. If you look at just what Zerodha does and what small case does with Zerodha, and I do not know where it will go. I have not analyzed in detail. But there are new things happening, and you need to be curious. You need to understand. You need to look at one thing. But having said that, my investment philosophy is very simple: not to be in fixed deposits. I still think I'm young. And what you're invested, but I'm risk averse in my investments. There I'm conscious of my age, that I don't want to take swings in my investment value, because basically that will go to my successors. I don't want to play with their thing. So I basically look at what I would call the most risk averse index funds, or ETFs. So it's a very simple philosophy, and distribute amongst them.
So,
and don't change frequently. Just leave it there.
So there, I think we have it from him. So, I mean, thumb rules are not what advisors are supposed to do. I mean, it is personalized, and I think that's what you really value from an advisor. Turning to the last thing, sir, before we throw it open for questions. The white paper written by Mr. Pramod Rao, for which you had written a foreword on reimagining nomination, making transmission easier and smoother. Uh, we have been making lots of advocacy efforts, etc. We're seeing some movement. Do you see the importance of that? Do you think that has an impact on the quality of life of individuals?
See, it has a huge impact. Now, this statement, when you say huge impact, says, oh, that's just a statement. But you really look at it. So you go back to why was this not an issue earlier? The same issue in terms of wealth was not of a material at a material level, which made a huge difference to success. So yes, well, very wealthy, it did come down a pyramid a little bit. There is no wealth to distribute, so really did not matter. But today the situation is completely different, and that class of people who have wealth which they will leave is increasing day by day. And if I roll to 15 years, 10 years later, it's going to be a vastly different number. And you have complexities. You have families where children are settled abroad. So how does succession happen? And wealth is created here. So there are a whole myriad of things. But in all this, the simple succession issue and how do you address these, I think is still not resolved. I think in a regulatory context between several agencies and maybe the government. But what I could understand from the good work that was done, where I had the privilege of writing a forward, is that the regulatory agencies are truly believe that it is a challenge. Now, I believe that people there also realize that this is a challenge for everyone, including themselves tomorrow. And there has to be clarity. And there has to be no, I would say, ambiguity. And I'm separating clarity and ambiguity because sometimes you go down and you find two things don't, by itself something may be clear, but when you look at two things, they clash. So I think it is what you did and what was put up, I think was probably the first move. A whole lot of moves need to be done. But I want to put it differently to this group and to your community. This is an opportunity to serve and to create a product which is, I think, going to be of value to you also. In the sense, you already do succession planning. You move on to handholding through succession. I think every family is at a shock when there is a loss. And the next steps are not known. It starts with how do you deal with the bank, how many bank accounts, every step I won't take you through. And then insurance policies, different succession things, whether the nominee inherits, the inherit as per the will, including property. And Mumbai, it's completely unclear. The law clearly says that for transmission of shares in an apartment complex, cooperative society, the nominee inherits. And no question should be asked. But you go to the society, it says you probate the will and get the will. So all sorts of confusion is there. So it's not just what you have said, but there are other fixed asset classes. But interestingly, I can say this, that the law in terms of fixed assets outside the 4 metros is much clearer. It's very simple and there is no ambiguity. You basically get an affidavit signed by all first-line inheritors to say who amongst this will inherit, collectively, individual or whatever, and it is transferred. And this is my personal experience. But in Maharashtra, at least in Mumbai, it was a challenge, not a big challenge because the probate, it happens in due course. So there is a handholding thing. Then there is this whole issue of assets which are stuck. I think Harsh's last paper I saw, it was 140 lakh crores. I mean, that is a humongous amount of things which has to be released. But there I can tell you that things don't happen. Things just don't happen. But there is somebody, not somebody, I think I must say that all of you can collectively make it happen. If you raise your voice and you work with your client to say that this is to be done. My own case, I can tell you that an asset which went into IPEF, it is now 6 months, no, it's now 8 months since all paperwork was done and it's all done digitally. Everything, you get your acknowledgement that all paper is signed, no movement. And it's a brick wall.
Your own case.
My own case. It's a brick wall. Well, you may ask me, why did I not go ahead? So let's see where it goes. So I think there is a need to move on all these fronts. But there's an opportunity to serve. And you will get your, what you should be getting on that service. But to me, that is a small part. The serving is huge, and you release 140 lakh crores. You see the systemic impact that this would have, and the impact on those people. And it's a new line of business, I would say. It's a completely new line of business. But I think it segues from what you are doing into a post. And that is going to be as big an opportunity as advising, as there is wealth in the hands of people.
So two things I just want to inform you that as ARIA, we've just given in our suggestions on the consultation paper that MCA had asked for to reform the refund process at IEPF, which is so convoluted currently. Also on the nominations and other things, we are working very, very hard. One big announcement that we have made today, ARIA has tied up with Kotak Life Insurance to provide fiduciary advice to the family members where the policy holder has died, because they are holding unaccustomed amounts of money, very vulnerable. And I think our Women for ARIA team is working with them to sort of provide fiduciary advice, do hand-holding on all the things that you have mentioned.
That's brilliant. And I compliment Kotak and ARIA. I go one step further. Provide it, I know this is Kotak Life, make it into a platform which is wider, because I think that's where the need is. It's a range of assets. And I think insurance is one of the most complicated, unfortunately, though it looks simple. Well, everything is complicated. But I found the bank, I think, is very clear. They say the nominee, so they are not going to wait for the will, which is fine. The will has to be in a separate thing, which is fine. You are acting as trustees, thereafter you do. But I think insurance, if you start doing it, if you simplify it on all movables, then I think the fixed assets part of it becomes much easier. But the fixed assets also have to be worked on simultaneously. I truly compliment this move.
Thank you, sir. We have time for about 2 questions. If there are any questions. Yes, Suresh.
Yeah, thank you, sir, for the wonderful perspectives about where India is going and about the leakages, about the 25%, 30%, and potentially we can grow at 10%, which is extremely heartening. The number which you're talking about is 30 trillion, 40 trillion. I mean, we are going to be somewhere there. While all those things are very heartening, very glad to know, there is one problem which, I mean, we are all facing in our industry and probably in all industries. For us to reach that kind of a figure, manufacturing has to fire up in a major way. So we are a service-oriented economy as of today, and manufacturing has to fire up. So one of the problems which we are all facing, in India, is that we don't have a proper skilled workforce. And we are all struggling, even at our level, I mean, very, very small practices, we are all struggling to get skilled people. So that is a major problem, which is probably going to be a stumbling block for manufacturing sector, services sector, and for India itself growing at that kind of a pace which you had mentioned. What are your thoughts on that, sir?
I think very interesting questions. I think there are several challenges. Workforce is one of them, but I will share with you how that has been solved or can be solved, not necessarily through the government skilling efforts. But the more interesting problem is how does manufacturing sector grow? Manufacturing sector grows through 2 routes. One is domestic consumption or exports. We were not export facing, so that has to happen. And that's an opportunity. I think domestic consumption, our corporate sector, the manufacturing sector is well able to meet. And today they have cash generation, free cash flows, which are good enough to meet their own investment needs. very easily up to 10% growth they can fund out of cash accruals, maybe just a little bit of bank borrowings for working capital. So they are in good shape to meet that. If it's a bigger opportunity global and they have to set up a completely new set of a greenfield plant, they may have a challenge. But if they grow at 10% and that's the rate at which domestic demand is growing, I think they are fine. Other challenges they had earlier on, funding, red tape, delays, all those are over. Today, a plant can be commissioned in 1 year, 1.5 years at maximum. When I started my appraisal, 4 years to 4.5 years was the minimum. So things are happening at great speed. So why don't you see the numbers moving? We don't see the numbers moving because in the last few years, they had capacity which was set up, which was not utilized. That is getting utilized. So I don't really think today, if you look at corporate India, every one of them is in investment mode, but not borrowing. And we are obsessed with borrowing, and corporate India is not talking about what they are doing through their own. The only way to do it is to look at fixed asset growth in, say, top 5,000 companies over the last 5 years, and you will understand what's happening, whether they're investing or not. The workforce issue is a very interesting issue. And see, large corporates who had this problem have solved it themselves. They a priori open a skilling school themselves and do it. I have seen corporates build very large plants where there was no skilled worker available for even building the plant. First thing they did was set up a school for welders, masons, and et al. And then started implementing and did the implementation in record time. Come to banking in our business, we did the same thing. When 2000, we didn't have skilled people. We codified all our teachings, gave it to NIT. It still runs. NIT still runs the module. And we said, you have intake students and give them this education. 6 months later, we will underwrite 5,000 people a year. So first 2 or 3 years, only ICICI took these people. And thereafter, we said they can go to market. So I still continues. I do not know how many they produce. For senior officer level people who could come in as deputy managers, we ran a school and we still run a school with the Manipal University in Bangalore. The initial year intake was 1,000. Now it's between 2 and 2,000 a year. These are in-house. They stay like in a campus and are trained. And now I think most private institutions and government banks have all followed the same model with the same university. I do not know what the aggregate number. So where there is no skill, we will have to build that skill and do it. And India has enough number of people. And again, in terms of opportunity and certain myths. So there was, that time when I remember this distinctly, 20 years back, when my HR head, Ram, came to me and said, he wants to run this campus with Manipal University. I said, Ram, how many people? He said, I want 1,000 people in the school. I said, but where are the 1,000 people? I said, all of those are, the good people are all, my idea, urban India. They're all there. So, but where will you get these 1,000 people? And he says, it's a graduate who's going to be the thing. He said, I'm going to recruit from rural India. So I told him, rural India, but you think there are? So, yes. He said, we have no opportunity, so they have not gone out. So I told him, okay, you start this on one condition. You will advertise the positions or this opportunity only in the vernacular press. So he did that. 1 month later, he had 100,000 applicants for 1,000 seats. Didn't end there. So then I was very eager. I said, you administer the test in vernacular. Give the kid a chance to answer in English, but test in vernacular also. He can take a choice. 15 days later, he comes and says, sir, you won't believe what has happened. I said, what? He says, 10,000 of these kids are above all the hurdles we have set. They are far above our own hurdles that we had set. And we want 1,000 of them. So I said, what is the root cause? How did these guys miss out from the mainstream? He says, every one of them, this came out much later on. When the graduation happened 1 year later, he had actually done video interviews asking kids, why did you not go to college? And they have the typical Indian story. I've got siblings to educate. I've got siblings to get married. Father is out of a job. So I had to take some small job, but not pursue my ambition. So here he could pursue the ambition. Initially, ICICI Bank did it as a stipend. So they got a stipend for the period they were with the bank. And later on, I think much later on, I heard they made it into a loan, which was a modest loan. but so it became a win-win for the bank in a way. So there are, I think, a lot of ways in which we can address this issue of skilling. I don't think it is a problem. Infosys, for example, had, you won't believe it, 50,000 intake in a year, every year. 30,000 for replacement, 20,000 for growth, every year. And has a 10,000 seat campus in Mysore, 10,000 seat, does 3 turns in a year. That's 30. The other 20 come from other campuses. Now, there it is for graduates who are through their screen, but still have to be skilled again entirely. There's no point in saying that they don't have skilling and they did it themselves. But other tech companies have done it differently. So there are a lot of solutions which are tried and proven. And we think laterally we have abundant number of people. So that's not a shortage. And now my knowledge is that they are there in rural India also. And there is an equal balance between men and women. So gender, I call it neutrality, not equality, has to be at the fore. This recruitment in Bangalore, for example, gave us all the balance that we required. Gender balance, and if you look at distribution so that you serve the underserved. So every single thing that we wanted was met through this open, thank you, this open recruitment that we had. So think beyond.
Wow, I think this is...
That was not me, it was my colleagues. And I want to share this, that almost everything that has happened in ICICI, my colleagues have done. I honestly mean it. They've had to push me, or I had to push, not me pushing them, on new thoughts and new things.
I think we should ask the colleagues whether you were pushing them or they were pushing you, sir. But it's amazing. It's quite amazing. I mean, if I do a quick poll of hands, how many people connected with ICICI in this room? Look at that, sir. Look at that, sir. Right? This is ICICI University. I think India's economy, India's at least finance and banking sector.
Something then, but this is for everybody. Everybody has contributed to the momentum and things. We were the early movers, and that happens in everything. But what gave me great pleasure was that out of the digital fintech startups, and I was at an occasion talking to a group, and then a few people wanted selfies, and they said, we're all from ICICI. As I was going to my car, I couldn't resist. I said, how many people from ICICI have started fintechs? Founders. The title is founder. I said, about 100 people. So I was amazed that 100 people have gone out and become entrepreneurs. I wish all of them success, and there will be many more we don't know. But I think that is what is required. So we keep the thing going. And digital India. So the future is digital India. So all good wishes.
Wow. Wow. The lesson that I take away from here is that the old thing that Kamath sir used to say, that, every constraint is an opportunity, continues to hold true. And it is just our mental shackles that is keeping us from, looking at them as constraints rather than as an opportunity. And second, I think he has always been very bullish on our profession and the need for our profession as the aspirational India grows. Thank you, sir. Thank you very, very much.